Hey, what's up traders, welcome back to Forex Gym. My name is George and I'm an independent Forex trader. In this video I'm going to talk about what not to do if you want to make money in a Forex market. If you've done your research on the internet, you probably find a lot of information, the top things to do in order to make the money in a Forex market, 10 tips and tricks and all that to make money and be successful in Forex trading. But how about what you should not do and things to avoid to be successful and to make money over the long run. So I identified 5 trader killers which I'm going to talk about in this video coming up. But before getting into it, make sure to smash that like, and if you're new to this channel, hit the subscribe. I upload videos about trading every single day. Now without further ado, let's jump into these 5 trader killers, and the number 1 coming in is risking too much. Have you heard of it? Losing trades don't matter, but they do not matter only if you manage your risk. If you're risking 20% of your capital every trade, every single trade, then it does matter. It's only going to take 5 losing trades in order for you to wipe out your entire account. So you have to risk only a fraction of your capital. How often can you have 5 losing trades in a row? I would say it happens more than you think, especially if you're a beginner trader. It happens much more frequently than someone who has a bit more experience. So that's why if you're risking 20% each trade, it's only gonna take 5 losing trades before you wipe out your entire account. So that's why you have to limit your risk of maximum 1% or even less if you're just starting up. That way, if you have 5 losing trades in a row, you're gonna only lose 5% of your capital. That way you can stay in the game and work on your skill, work on your strategy until it starts working for you. Even if you have a few winning trades in a row, risking 20% each trade, that's most likely gonna be because of the pure luck. And it's only a matter of time before that luck runs out and you will wipe out your account. Humans are greedy by nature. We have a strong desire for wealth, whether it's gonna be money, real estate, or any symbols of wealth. And the only way to contain the greed is to build discipline, and that one takes time. And number 2 trader killer is being over leveraged. What that essentially means that the broker is lending you money to trade, and I've seen the leverage go as high as 1 to 500. So every $1 you can trade with 500 USD. You would say that's a good thing, especially for someone who can't fund the account with a few thousand USD on the brokerage account. So if you just have with the 100 USD and you can trade with the 500 times that amount. That's only good if you know how to trade and your experience and you know that you can profit over the long run. That could be a good thing. However, if you're inexperienced, you're just a new trader who has no idea how to trade on the financial markets, that could be a very, very bad thing and you can suffer a big losses. So that's a big downside on the leverage. Brokers know that very well, that's why still they offer you, and then once you go to that negative balance, then you're gonna owe the brokerage a big amount of money. And number 3 trader killer is micromanaging every trade. So what I mean by micromanaging the trade, when you put the trade, you already identified your stop losses, your take profit, you assess the risk, so all that seems very good and it feels good, so it feels the right trade. However, when you put that trade, you are sitting next to the screen and observing every single pip. How the market is doing, how this trade is performing, is it getting close to my stop loss, is it moved too fast, and all that. So it's getting into your head and you can't get away from the screen. There are so many things can go wrong when you start micromanaging your trades, and first and foremost, you're gonna be starting to overthink your trades, and you're gonna be asking questions such as, is my trade at a good entry? Is my stop loss in the right place? Is my take profit in a good place? Should I even take in this trade? So you're gonna start thinking all this, and maybe you're gonna have a look at the charts and you're gonna see that your stop loss in a good place, so you have to move your stop loss even further away from the entry, which is gonna expose it even with a bigger risk. And at the end, this is gonna reflect on your account balance negatively. So how can we fix this and how can we approach this that we're not gonna do that? If you find yourself that you can't go away from the screen or you're checking your trades every single minute, then I would say we need to build a discipline. And how we're gonna do that is step by step with a small increments. So if you find yourself that you can't go away from the screen or you're checking very frequently, such as like every single minute, then let's build a discipline. That's what we can impose, that checking your trades every 15 minutes. So we do have that 15-minute time frames, or if it's very severe, then you can start doing it by every 5 minutes. So check your trades every 5 minutes. And once you get good at that and you don't find it hard to check it every 5 minutes, then it gets easier, then you can move to the 15-minute time frames. So checking your trades every 15 minutes. And once you get good at that, then you can move to the half an hourly. So checking your trades every half an hour. Then you can move to the bigger time frames, such as 1 hour. Check your trades every 1 hour. So that's how you build a discipline, small, step by step, with small increments. No, don't try to jump from, if you're checking your trades every single minute, jump into the 1 hourly. So checking your trades once every hour. And number 4 trader killer is doubling your trade size to make up the losses. That's the first thing pops up in your mind when you start going into a losing trades. Let's say you're gonna have 5, 6, or 7 losing trades in a row. You want to make back that losses. So the best thing and the fastest thing to do is doubling your trade size. That way, in 1 or 2 trades, if they become a winner, you're gonna make that losses back very easily. But what happens when that next trade becomes a losing trade and you already doubled its size? Then you're gonna start doubling on that side again, and if that trade becomes a loser, then you're gonna double it, and until eventually you're gonna wipe out your entire account. The doubling your trade size only gonna get you one step closer to wiping out your account, and probably until eventually you will give up after that happens. So we need to keep that in mind, that never double your trade size. We all have losing trades, and having 5, 6, or 7 losing trades in a row is just part of the journey. There's nothing much we can do about it other than then just move on to the next trade. I've had more than 7 losing trades in a row in the past, and probably gonna have it in the future. It's just this small expense we pay to the Forex in order to trade in such a big Forex market. So there's nothing much we can do rather than just move on to the next trade, forget about it, and focusing or making money in the next 50 or 100 trades. So if you find yourself uncomfortable once you start going into that few losing trades in a row, there's a few things you can do. The one of them is, as I mentioned, that reducing your position size. And then once you're coming back to this normal routine and you start having these winning trades, then you can always increase that position size, come back to the normal, the ones you had before. So there's nothing wrong with this. The market is not going away. So the market's still gonna be there once you're gonna feel comfortable. The other thing is, if you're feeling not confident in your strategy, the best thing you can do is start backtesting your strategy and see, after you test it, let's say in 100 potential trades or 200 or 300, doesn't matter the amount of the numbers you need, and you have a look at the numbers and it shows positive balance, that you know that your strategy is working. So try to focus on the bigger picture. Try to see that in next 50 or 100 trades, that's 5, 6, or even 10 losing trades. It does not really matter as long as you manage your risk. That's how you gain the confidence, by backtesting, and you will gain the confidence in your strategy. And focus on the bigger picture. In the next 100 trades, you will be the positive, in the positive balance. So if these 6 losing trades or 10 losing trades, it does not really matter. And number 5 trader killer is over trading. Traders get this idea they have to be always in the trade, always looking for that next trade and being in front of the screen and trading 24/5. And if they're not in the trade, they're always looking for that next trade and they want to find that quickly. Typically, the traders who are looking for that always to be in the trade are the new traders. They want to be that part of the excitement and to trade all the time, because they think that that's going to lead to more trades, going to lead to more money. However, that's simply not true. The overtrading can lead to more losses and potentially even the bigger losses, because if you're gonna be overtrading and always in front of the screen, you might not be as sharp. So if you're sitting in front of the screen for the 8 hours straight, and after that time and you're always trading, your brain is very busy, so you might find it getting to the trades which you should not even take in. So that can lead to more losses and potentially maybe even wipe out your account, because you're going to start making mistakes. So doubling your trading size, moving your stop losses, and etc, etc. And if you find yourself that you are over trading and you want to stop that, maybe you're taking too many trades and it does not working in your favor, then you want to address that issue, because it can cause you losing a lot of money. So how are we going to go about it? First of all, the one thing I can recommend is to set your daily trade limit. So let's say you're going to be taking, depending what type of trader you are, you're a scalp trader, day trader, or a swing trader, then just set your daily limit. So let's say if you're a day trader, maybe you want to take the maximum of 5 or 10 trades in a day, and once you hit that limit, then you're not going to be taking any trade. Now, what that gives you, that you're going to be thinking when you look at that trade and you're thinking, well, I'm going to take the trade, and maybe it doesn't look as good, the setup is not good, or it kind of goes against your strategy and it doesn't meet that requirement. And you're going to think more that, okay, I don't want to take the trade and I want to wait that a better trade with a better setup which suits more strategy more. So you're going to think that more into it before taking that trade, so that can limit the taking the unnecessary trades. Okay guys, this was the 5 trader killers, and if you find this video helpful, please smash that like. It really helps my channel immensely. And if you're new to this channel, hit the subscribe. I upload videos about trading every single day. Also join us our live daily forex analysis, which runs Monday to Friday, 8 AM UK time, where we can interact with each other live, as well as you can ask questions or request any other currency analysis. Have a great day, and I will see you guys in my next video.